Hello, guys. What's up? This is Francisco with Valoriso Capital, and today I want to bring you a state of the market video. We're gonna take a look at some of the most important indices in the market that I take a look to understand what is the market trying to tell us and what is the path of least resistance, so that we can position ourselves in the best possible way to make money in the market and to profit from the moves that we're seeing right now. So first of all, starting right here, I have the ES, which is the S&P 500 future contracts, and we can see that we have been on a pretty volatile market. As you can see, this was the top that we made basically uh, basically just a couple of months ago, and now we're seeing that we have the bearish cross right here of the 8 and 21 exponential moving average, and that we saw a really strong move to the downside in the S&P. We broke the 200 SMA. We are still holding this follow through day on really high volume. But however, just take a look. If you measure Fibonacci retracement from the top through the bottom of this move, we can see that we haven't been able to clear the 0618 level of the Fibonacci retracement, which is a really important level if you study Fibonacci. And just to keep things simple, guys, as you can see, the S&P 500 continues to be below a decline in 50 SMA, and we are below a decline in 21 EMA, and now we are below a decline in 8 EMA and below a 200 SMA. As you can see, we had two distribution days on the S&P 500. And what is the expectation going Monday? The expectation going Monday is that this 200 SMA is probably going to act as resistance. Of course, we don't know that, but just for watching at the patterns, just for watching the price action, as you can see, this day right here, we had a a bearish engulfing bar, and then we had a fail. We failed at the 21 EMA. So this price is suggesting that there's more downside coming. Perhaps we're going to test this low right here. And of course, as long as we are below the key moving average, the path of least resistance continue to be to the downside. So be aware of that. Then moving into the Nasdaq composite here. Well, this is the Nasdaq 100, the QQQs. We also can see that if we make a measurement of Fibonacci, we haven't been able to clear this 0.050 retracement level, and the Nasdaq hasn't been able to clear this 200 SMA, and now we're coming down here into these levels that I have. And for some of you guys that don't know, I use Fibonacci quite some, and here I have the what's called a Fibonacci reflection, right? Which is basically I'm measuring this move to this move and reflecting it to this rally right here, and we have a symmetrical move right here to the downside. So let's see if the Nasdaq is able to keep that level. Perhaps we're gonna see a bounce into this declining 8 EMA before we continue to move to the downside. As you can see, we continue to hold this follow through date, but of course, we have two distribution days in the Nasdaq as it failed its test of the 200 simple moving average. So just be aware that as long as we're below a declining 50 DMA, the path of least resistance continues to be to the downside, since we don't have institutional support below us. Now let's move into the Dow Jones, right? On the Dow Jones, we can see basically some really similar patterns. We have this really strong move to the downside. We have the follow through day right here, really strong volume. We continue to hold that, but of course, price is failing at this 50 daily moving average, and now price is below a 200 SMA, and we of course had two distribution days back to back right here in the YM, which is the DIA future contracts. So the path of this resistance here in the YM continues to be to the downside as well, and just be aware of that if you're planning to take any trades to the long side, or perhaps if you want to play this for a continuation lower. Now here I have the RTY, which is the IWM, and you can see that we have been on a really strong downtrend, right? We have basically we came down, we broke all key moving averages, we bounced to the 21, failed, then we make a stronger bounce into the declining 50 SMA, and then we basically had the plunge to the downside. And for now, right, we didn't hold, right, we didn't had a higher low with the after the follow through day, And right now we're basically forming a, if we just keep things simple, right? We are below a declining 50 SMA. We're below a declining 200 SMA, and we are basically right now below a 21 declining exponential moving average. And if we just keep things simple, this is starting to wedge here, which is usually what people call a bear flag. And we have two distribution days followed, right? We have two distribution days on Thursday and on Friday. So the expectation is that price is going to break this line right here and will continue to move to the downside in the IWM. And now moving into the IWO, very similar action to the IWM, right? We had the move down, we have the bounce, the move down, the bounce. We didn't make it to the 50 or to the 200, and then we just had a bearish cross of the 8 and 21 exponential moving average. We had a really strong move to the downside. We didn't hold this follow through day that we had in the indexes. We made a lower low, and now we're basically wedging the same way that we're doing it in the IWO. And as you can see, price already closed below the trend line of support, and we logged some distribution days here as well. You see that we are unable to go below this pivotal move, and we continue to be below a declining 50 SMA. So we should assume that the path of this resistance continues to be to the downside in the IW as well. And now moving into the ARC ETF, right? This is basically, we can see that the patterns are really similar, right? In between the IWM, the IWO, and the ARC. We can see here that ARC failed right here at the 200 SMA. Then we had the bearish cross of the 8 and 21 SMA. Then we had a really strong move to the downside. We had the bounce into the 21 exponential moving average, and then we just saw continuation. We had the follow through day here, right? We didn't hold those lows, and right now we're starting to wedge, and this looks like it's going to break lower and will continue to the downside. We continue to be below the key moving averages, so the path of least resistance continue to be lower as well. And something really interesting that I want you guys to see is that ARC is basically very close to test the 2020 breakout level, which is somewhere around this 60 level right here. And we can see that if we just do some Fibonacci extensions, right? I use this low right here between this high right here, and the 1272 extension comes right here into this level. So I think there's a high probability that ARC is going to break below this level, come down here, test this breakout level, and perhaps we're going to see some more accumulation right down at these levels here. And also you can see that in ARC we also have some distribution days. So I think that you continue to play this to the downside, as is the path of least resistance. Now let's move into Bitcoin really quickly here. We talked about Bitcoin last week. We mentioned the decline in 50, we mentioned the decline in 10 week, and we can see that Bitcoin basically stopped right there at those levels that we mentioned, right? We talk about the rally. We mentioned that we have to take into consideration these levels because they're really strong institutional levels. And we see that Bitcoin is starting to decelerate its move to the upside right here. And of course, we also have some supply levels of price, of technical price right here. So where is Bitcoin going to go? Of course, we don't know. But just as seeing this, I think that there's going to take some time for Bitcoin to form and for the 50 to start to curl up. Perhaps Bitcoin is going to move up, it's going to retest, and then perhaps we're going to get that move into the upside, or perhaps Bitcoin is going to get rejected and we're going to see lower lows on price. Now let's move into crude oil, and we can see that crude oil is basically in another place right now. We had a really strong move out of this base. We can see that crude oil, we had the bullish cross of the 8 and 21 exponential moving average right here. We had a really strong move above the 50 SMA, which we haven't retested it. And now price is just moving really strong to the upside. We can see a lot of positive volume in this move to the upside, really strong breakout. So I think there's a high probability that crude oil will just continue higher. But of course, if you want to jump into this trend, wait for a test of the 21 exponential moving average, which we haven't tested in quite some time right now. That goes for crude oil. Really strong mover, really strong bull market right now in crude. And now let's go into gold. A lot of people are talking about gold. For me, the action continues to be really choppy, but if we take a closer look, we can see here that we have been making higher lows in price, right? And for you, some guys of you call this a BCP pattern. Of course, we're not near highs or anything like that, but clearly volatility has been contracting a little bit, moving right here into this pivot. So perhaps there is right now there's a high probability that gold, given that we're starting to see some increasing volume into this side of the range, that we're gonna break out this level and test these highs that were from May. So have a look into gold. Of course, we know that we are also seeing a really strong move out of the weekly. Let me show you, guys, really quickly the weekly chart. This is the weekly chart from gold, and we can see that we have this trend line. We're starting to break out of that trend line, and here you can see the kind of the volatility contraction into this level right here. So have a look into gold. Take a look at some of the miners, because there's a high probability that gold is going to be a really nice trade going into the rest of the year. Now let's move into the 10-year yields, and of course you can see this is basically, right, this is price moving out of a base. Right here we can see the volatility contraction as we come into the pivot of price, and now we're having a really strong move to the upside, and there is no signs of this stopping. A good way to watch for the potential moves here in the 10-year yields is just by watching the moving bonds, right? So if we take a look at bonds here, we can see that bonds broke down from this level. Right now they're testing this level right here, and there's a high probability that bonds will just continue to move lower, which means that the 10-year yields are going to continue to move higher, which is going to benefit some of the metals, right, such as gold. And if we just zoom out here a little bit, we can see that bonds here are just making this massive head and shoulder stopping pattern, and we just have to be really aware of that, right? That we have this massive head and shoulder stopping pattern, and that bonds can go much lower here. Doesn't mean that we're gonna retest these lows. Of course, nobody knows, but we're already retesting this level right here. The next level that we have is this level right here, and then we're going all the way to 150, 143. So just be aware of that. Bonds are just having this massive head and shoulder stopping pattern, and we can see some low prices on bonds, which means that the 10-year yield is going to continue to move higher, and that's going to put a lot of pressure in things like the QQQ, and of course that's going to drag the S&P lower, and some of the other indexes such as the ARC and IWO. So be aware of those as well. So now let's move into some of the sentiment indicators that I watch. Let's first start with the put call ratio. And this is the way I look at the put call ratio, right? I look at extreme levels, right? Somewhere above one, and of course somewhere below 0.55 for some of the bearish contrarian plays. But right here, right, this is the start of the year, and the SMA that I have right here is the 10 simple moving average. And the way that I use it is, as soon as the 10 moving average starts to come starts to trend above the 0.90 or this one level, the market usually starts to find a bottom. But of course, that's just is not a perfect indicator, but it's a good way to track sentiment. And we can see right now that sentiment has been really bearish, right? Basically all the daily closes, right, I use bars to be aware of the daily closes of the put call ratio, and we can see that basically all of the closes have been above the 0.70 level, which is a really high level for puts, right? So we can clearly see that sentiment is bearish, that we have a lot of put buyers, and we can have more, right? We can have more. This can easily go to 120, 130, 140, and we can continue to move to the downside. But just be aware that people are starting to get bearish, and that usually is a sign that we might be near a bottom, but of course we might not as well. So just be aware of that. From the put call ratio, I think that this can go much higher. Now going into the high yield bonds and the spreads, we can see here that this is really interesting, right? This for you to have a little bit of context. This was COVID right here, right? Usually when we start to see these spreads to widen up, we usually see some really strong moves to the downside that we saw in the COVID crash. And right now we can see that we have been moving down, 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 but right now we're starting to break up to the upside, and that usually is a sign that that they're dumping these high yield bonds, and there's a high probability that we're going to see some more pressure to the downside in the equity market. So be really aware of this signal. This is usually a really strong signal, and we have to be aware of it. So have a look at this chart. If you don't have it, is the here is the symbol for you to watch it on trading view. Is a really important indicator for us to watch. Now let's move into the MFI. This is the percentage of the stocks that are above their 50 simple moving average, and we can see that this is really low right now. We're trading at 35%, and usually, as you can see on the chart, usually we can see significant bottoms in the market when we start to trade somewhere around this 10 to 5%. That usually means that the market is really oversold, but we are not near those levels as yet. So we continue to be right on this, basically on this nowhere place. Just be aware, have your alerts ready. As soon as the market starts to trade down here, perhaps we're gonna find some a meaningful bottom. Now let's go into the skew. For those of you who doesn't know what the skew is, basically the skew tracks a little bit of the premiums in the options. And some way that I see it is that usually when the skew is somewhere around 145 or 150, we see that the hedge funds are basically pricing the premiums on the options contracts. They're pricing it really high for the downside. So usually this is the hedge funds hedging for something that is coming. And usually when we see the skew this high up here, that usually marks when we that usually happens when the market is near a top. And we can see that right now we're starting to decline. So meaningful bottoms happen when the skew is somewhere around this 120 to 115 level. So we are not near those levels yet, but of course have your alerts set and be watching, and also be aware of this index right here, the skew. Now let's move into the VIX, which is my basically my favorite indicator to watch for volatility. And you can see right now that the VIX, the way that I see it, is as long as the VIX is above the 21 SMA, that we have a buy signal and we have a squeeze that is turning to the upside, we usually get these really strong moves into the resistance levels. Right, these resistance levels that I have here are the 3 ATR level and the 4 ATR level, which is basically three three average through range to the upside, or four average through range to the upside. And that's usually where the VIX finds a lot of resistance, and we can see some bottoming action in the market, or at least a probability for a bounce. But for now, the VIX is above 25. The VIX has a buy signal. So my expectation is that we are going to get a really strong move, perhaps above 40, and that's going to bring a lot of pressure to the equity markets as well. And now let's move right here into the name. Right, we seen right here that we continue to be above the 60 level. I think that we need some considerable more downside in the name index for us to see a significant bottom. And I think there's a lot of complacency in the market as of now. Now let's move into the fear and greed index, and we can see that we are now trading at 33. We are nowhere extreme levels, and there's a lot of complacency still in the market. There's a lot of deep buyers yet, and perhaps we're going to need another leg lower for us to clean all of this sentiment. So if we just make a summary, we just saw the market continues to be in a downtrend. We continue to see a lot of pressure on equities, and my current outlook in the market is a downtrend. We are below the 50. We're below the 50 SMA, and as long as we're below this 50 SMA right here, the path of least resistance continue to be lower. So I think that the easiest way to make money right now in the market is either you're short equities, or perhaps you're just sitting in cash waiting for better conditions, or just bullish conditions for you to trade. So thank you so much, guys, for watching. Let me know your comments, and don't forget to like and subscribe, and I see you guys on future videos. Thank you so much for watching.